from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, we're one step closer to a COVID vaccine for children. Pfizer and BioNTech applying for emergency approval today. Plus, IBM is taking a tougher stance on vaccine mandates, why some employees could be suspended without pay before the end of the year. Plus, the future of work is hybrid. That's the view from both Box CEO Aaron Levie and Cisco CEO Chuck Robbins. We'll have conversations with both of them this hour. And Apple's car ambitions take a turn, the company doubling down on CarPlay, which is already featured in a number of major vehicles. Now drivers will have more control options with just a touch of their iPhones. First, I want to talk about Pfizer and BioNTech submitting for emergency authorization approval for a COVID vaccine for kids today. This is a huge step forward in the vaccination campaign of millions of people around the world. Bloomberg's Kara Wetzel, our San Francisco bureau chief, joins us now. So how soon could this approval happen? How soon can kids between 5 and 12 be vaccinated?
Right, so Pfizer submitted its application for emergency use approval today. The FDA will meet later this month, followed by the CDC. And our reporting in Washington indicates that we could have shots in the arms of kids by the first week of November. So could be very soon. And that would be a major step toward getting, not just for kids, but for getting parents back to offices who might have been uncomfortable, toward travel, and really helping to jumpstart the economy for those parents who had been worried about this type of thing.
Meantime, we're seeing more companies take a stronger stance on vaccine mandates. Talk to us about what IBM just announced today. Employees could be suspended without pay before the end of the year?
Right. IBM is just, one of a growing number of companies who are now taking a harder stance on vaccine mandates. This follows President Biden's orders last month saying that he wants all employers that have 100 or more employees to either mandate vaccines or require weekly testing of employees. So for some employers, weekly testing, it's a headache trying to figure all that out, and they just want to have their employees vaccinated, and that gives them a reason to. So those rules are still being ironed out. Biden was in Illinois today met with United Airlines, which has installed such a mandate and has had about 98% of workers, more than that, vaccinated. So they're pointing to that as a real success story and something companies should be doing to increase vaccination rates for everybody.
Well, and especially with a vaccine for kids potentially coming soon, how could these new steps really reshape the way families are operating right now, the way schools are operating right now, and workplaces? Because there still has been so much uncertainty for all of them.
Right. I mean, that has been a major issue for workplaces and just the economy, is that parents, even if they are vaccinated, are still worried about going out, possibly bringing home the virus and transmitting it to their unvaccinated kids. That said, there's actually been surveys saying that it's only about a little more than 30% of parents definitely want to get their kids the shot as soon as it's available. There's a lot more people on the fence about it for kids, just having the uncertainty. It's not fully FDA approved. It won't be, this is an emergency use order. So there's still a fair number of kids, as with adults, who are going to be hesitant about this, and it's not necessarily, going to be widespread vaccinations for everybody right away.
All right, Kara Wetzel, our San Francisco bureau chief. Thank you so much, Kara, for bringing us those important updates. I want to take a quick look at the markets now. Our Gina Martin-Adams of Bloomberg Intelligence joining us now. And Gina, obviously this vaccine, vaccine for kids and these mandates are certainly having an impact on workplaces, on parents. Are we seeing this play out in the markets?
I think what we're seeing play out in the markets is more the Delta variant than we are seeing vaccines. What we did see over the course of the summer was, as infections were rising due to the Delta variant spreading, we saw a rotation into much more defensive plays in the equity markets, domestic stocks outperforming, tech and other defensive sectors outperforming. And once the rate of infection started to peak globally and trend down in early September, we've seen the reverse occur. We've seen, some cyclical sectors, maybe inflation plays start to outperform in the U.S. market, and we've started to see non-domestic groups start to outperform again. So as much as the market has been down in that period of time, the rotation that we've experienced is certainly very consistent with infection specifically. So to the extent that vaccines ultimately prevent another potential fourth wave coming in the winter, that would be amazing for the cyclical groups and the non-domestic sectors or segments of the global economy, which tend to perform best in that kind of environment.
So let's talk about what's happening in the broader markets. We saw tech markets on a roller coaster this week. Talk about a correction that hasn't seemed to be what's happening. We've also seen a bounce back this week. Where did the market stand on the day?
I think that tech was definitely the beneficiary of a willingness to sort of jump in and buy a little bit on potential resolution of the debt ceiling risk. I think investors, though, really only tiptoed in. I would have expected to see a much stronger surge in some of the stocks that were most beaten down on that risk if investors really believed that this is the ultimate resolution and not just kicking the can down the road to another discussion come December or so. Broadly, what we've noticed is tech stocks made their peak versus the S&P 500 a year ago, September, and have generally traded in a sideways direction relative to the rest of the market. Some months, as in the summer months where there's more defensive strategies being deployed, tech tends to perform well. But obviously early in the year, tech performed very poorly as investors migrated to more cyclically oriented groups. I think the earnings landscape, as you alluded to, we've got earnings coming starting next week, tech earnings in a week or two. Once we start to get earnings rolling in, we're going to get more confirmation, I believe, that the cyclical spaces are likely to continue to outperform. And as much as tech earnings are very, very strong, they're still not keeping pace with that recovery in other groups like the energy and industrials and materials spaces of the world. So that leaves tech at a little bit of a disadvantage still in the short run.
All right. Our Bloomberg Intelligence Chief Equity Strategist, Gina Martin-Adams, thank you for that additional context there. Now, in other news, Google will ban advertisements and stop funding media that contradict scientific consensus on climate change. The new prohibition applies to commercials that Google places online, as well as the sites and YouTube videos that run Google Ads. This includes any content that denies human contributions to global warming or treats, quote, climate change as a hoax or a scam. Meantime, Apple has a new plan for cars. Bloomberg has learned it is working on technology that would allow drivers to use iPhones to control the air conditioning, seats, radio, and more. Apple's CarPlay interface is already used by millions of drivers to control music, get directions, make phone calls. Our own Mark Gurman joins us now with more details on the new features. Mark, what can you tell us?
So yeah, like you said, you plug in your phone today into CarPlay, you get maps, you get third-party apps, you have Google stuff on there, Calendar, Apple Music, Spotify. But what you can't do is control your car's main functions, whether that's, windows, the backup camera, whether that's security, of course, seats, your speedometer, your clusters, basically everything else, right? And a lot of times you see drivers switch between the CarPlay interface and then the interface that's built into the car. What Apple wants to do is it wants to bring all those interface elements, all those knobs and switches and controls you might use outside of CarPlay into the CarPlay experience, because they believe that will give Apple users, a better overall experience in their non-Apple vehicles.
How does this fit into Apple's overall car ambitions? As you've reported, there's been some executive turnover, and it's unclear what the direction of the unit is going.
Yeah, this is not coming from that unit. This is not related to the self-driving car. But this would give Apple as a company, further insights into the car world. They would be meeting with more car partners, potential partners, I should say. So it gives them a little bit more experience in the car world. I also do think this is Apple's biggest step to date in terms of the automotive industry. Obviously, there was CarPlay 7 years ago. They've tried their hand at other initiatives like Car Key, EV routing, third-party apps for auto apps, all sorts of stuff like that. None of that has really taken off. So they're really hoping that this new CarPlay initiative is going to be something that becomes as ubiquitous as CarPlay today.
How big a business could CarPlay be?
Yeah, CarPlay, obviously, it gives Apple some form of royalties right now, depending on the car maker that they deal with on a model-by-model basis, right? But the important thing is that it gives Apple increased lock-in, right? Every time they add a new feature that makes your iPhone a bigger part of your daily life outside of the phone itself, that gives you another reason to upgrade to the next iPhone, to buy apps, to not switch away to Samsung, Google, Motorola, or whomever, right? Every time they add a new feature, you add your bank to your phone, your credit card to your phone, controlling your car from your phone. It's going to be a pain in the you-know-what to switch to Samsung, right? If they come out with a great phone. So they're adding more and more barriers to that as they add new features that really integrate into your daily being.
All right, Mark Gurman, thank you for that update. Appreciate it. Coming up, new tools for a hybrid work future. Box CEO Aaron Levie joins us next to talk about his vision for the working world to come. This is Bloomberg. Fresh off a win in a proxy fight with the hedge fund Starboard Value, Box CEO Aaron Levie shared his vision and strategy for the future of productivity at their annual conference, BoxWorks 2021. With a bet on the future of work staying hybrid, Box has two new tools that promise to beef up security and team collaboration. He joins us now for a deeper dive. Aaron, it's been a while. You've been a little busy with this proxy fight, so I do want to start there. Now that that's behind you, I'm curious what it feels like to be on the other side.
We definitely enjoy being on the other side. I think we had a very strong message for shareholders about how our growth has been re-accelerating, and we have a clear plan to be able to hit our improved profitability and growth targets over the next couple of years. And shareholders decisively voted in favor of our strategy, and we're super happy about that. But it's definitely been a pretty crazy process, and it's nice to have that behind us and really move forward with the business at this point.
Are there any key takeaways or learnings from, this activist challenge and activist challenge?
I've always been a little bit, sort of conflicted about this because I think activism is a strong force in the public and capital markets. I think it's helpful that shareholders can have a voice and they are able to share their perspective on businesses and business performance. 2 years ago, when Starboard came into the business, we actually embraced the changes that they were looking for and the energy they had around it, in particular bottom line performance. So we ultimately restructured our board of directors. We put together an all new plan and operating model for the company. And then we ultimately were able to exceed many of our bottom line targets that we laid out. And now we're shifting really a lot of the focus on the growth rate and what we can do to re-accelerate growth. So overall, I think activism really has can have a very positive force on company performance. Eventually, we got to a point where we disagree with some of the path forward on the top line. And again, we're happy how shareholders vote. But overall, I think we will always remain constructive with all of our shareholders, including Starboard at this point. So definitely just looking forward now to the next stage of the business.
So let's talk about that. You're steering Box in new directions. I want you to paint this picture of the future that you see with more hybrid work in it.
Yeah, I think there's three really big mega trends that all companies are facing. And this is, sort of, you've had a litany of obviously guests that are either, seeing this themselves or creating software around it. But one is we're going to be working from anywhere. There's no question that is a core part of the future of how we're going to work. Two is every single experience that we create for our customers, partners, colleagues, suppliers is going to be digital first. And three, we know that data security, compliance, and privacy are going to be at the forefront of how companies manage their information in the future. And so if you think about a life sciences company that has to do clinical drug trial processes, or a media company that has to make films, or a government agency that has to be able to work with their various constituents, all of that collaboration is going to generate content. They have to be able to secure that content. They have to be able to automate workflows around that content. So our platform, what we've been building out, is the leading content cloud that serves over 100,000 customers and powers the end-to-end life cycle of content in the cloud. So the security, governance, workflow automation, collaboration, now e-signature of that content all on a single platform. So we think work is fundamentally changing, and we just want to build the best platform to help companies manage all of the data and content that they're generating around that.
Meantime, the pandemic has really exposed the challenges in cybersecurity. We've seen a spike in ransomware attacks. You're introducing some improvements to Box Shield to combat this. How will they work, and what does it mean for your customers?
Yeah, so one of our fastest growing products, and certainly the fastest growing recently, has been Box Shield. This is our advanced security product where data that goes into Box can be viewed through the lens of data classification, malware detection, threat and anomaly detection. And then we can alert the security team if there's any kind of anomaly with what's happening to information. So Box Shield has been, again, the most sort of powerful addition to our portfolio in the past couple of years from the security standpoint, especially. And we just released advanced malware detection. So if there's any kind of ransomware that could infect a computer or machine, we can then detect that if that's coming into the system. So advanced malware detection that can really ensure that there's no infection of data. But ultimately, you're going to see us build more and more capabilities over time that ensure that the more data and more collaboration you have in Box, the better we can protect your information. And that's our Box Shield value proposition.
How are you personally thinking about return to work? What is your plan? Do you have a date, or are you, like Microsoft, they say they can't give a date at all because things are still so uncertain?
Yeah, well, I would say 100% of all dates we've ever given have been wrong. And so I definitely can appreciate Microsoft's ultimate stance on just sort of stop playing that game that we all kind of went through in the past year and a half. But we have some offices opening up internationally right now. And we do intend to open up offices in the early part of next year throughout the U.S. It could come even sooner as different mandates evolve, and we think that the healthcare conditions around Delta improve. So we've tried to keep a very flexible approach throughout the entire pandemic. There's no point that we've sort of dictated where all employees have to come back to headquarters. We know that there's going to be greater remote work in our future. We know that we're going to continue to evolve to have greater flexibility around when you come into the office and when you can work from home. So our approach has been, I think, one of being prudent and pragmatic, where employee choice and flexibility is at the forefront of a lot of our decisions around this.
A lot of employees are having this come to Jesus moment right now where they're thinking, do I want to stay in this job or do I want to do something else? And is this job going to give me what I need? And I've heard some folks say tech companies are never going to be able to get engineers back to the office. And that's going to really raise the stakes in the war for talent. How do you see the war for talent changing in Silicon Valley in a world where remote work is an option and often preferred?
Yeah, I think it's definitely an environment where employees I think are going to be able to increasingly have more flexibility in where they work from. The companies that have those increasingly more flexible stances will be able to obviously have an upper hand in recruiting. At the same time, I think employees are also there's a wide variety of where people fall in the continuum of wanting to go to an office or wanting to work remote. And so I think companies that have the greatest amount of flexibility around that will be the ones that can hire the best talent. And there will be, again, different approaches to some of the cultural aspects of how we actually create these environments over time. We are only in the earliest innings of what that all looks like. I think at this point, most people are just guessing and trying to predict what could happen. Very few of us have actually landed on what that final, kind of balanced hybrid way of working is going to look like.
We're seeing new legislation, meantime, that's focused on pay transparency and pay equity. This is something that many industries and the tech industry have struggled with. And I'm curious how you think this could impact retention, and especially retention of women, underrepresented minorities, where we've historically seen a lot of attrition.
Yeah, I think, certainly any increase to pay transparency and equity, I think is a good thing. Internally already at Box, we pay a lot of attention to this, but to the extent that there's greater legislation or external forces that enforce it further, I think is only a positive thing. And I think, one of the aspects of remote work that and being able to extend beyond Silicon Valley that we've actually seen, start to play out is the fact that you can tap into talent pools that just regionally you would not have been able to hire from previously. And that obviously has a dynamic of being able to expand the total number of individuals that we can get into the tech industry as another means of driving more diverse and inclusive organizations.
All right, Aaron Levie, great to have you back now that the proxy fight is behind you, and always appreciate you sharing your views of the future. Thank you so much for stopping by. Thanks, Aaron. Okay, coming up, as holiday season approaches, the question remains, how will the supply chain shortage impact shopping and shipping? Transportation Secretary Pete Buttigieg answers that for us next. This is Bloomberg. other stories we continue to watch. Transportation Secretary Pete Buttigieg is warning that the supply chain bottlenecks threatening the delivery of Christmas gifts to consumers around the world aren't going to be solved anytime soon. In an interview with Bloomberg Television, Buttigieg said the Biden administration is taking short-term action in hopes of easing the holiday crunch.
Some of this is a bigger picture, longer term issue that's going to take years and years to address. These challenges are definitely going to continue in the months and the years ahead, but we're wasting no time in taking steps that are going to make a difference right away.
Buttigieg said the administration was working to reduce transfer times at key California ports and dwell time for goods shipped by rail, and argued the president's infrastructure legislation could help further limit delays. Plus, crypto billionaire Mike Novogratz and Invesco's new partnership starting to bear fruit. They've come out with two crypto-flavored exchange-traded funds that began trading Thursday. The pair invest in a range of companies involved in crypto activities, from mining to blockchain technology. Industry observers say the green light for actual futures-based Bitcoin ETFs could come this month. And according to sources, Momentive Global, the owner of SurveyMonkey, is exploring options, including a potential sale after receiving takeover interest. The company is working with a financial advisor, and discussions with suitors are in the early stages. Momentive hasn't made any final decisions and can still opt to remain independent. And South Korea has long been known for its manufacturing. Now the Netflix hit Squid Game is taking the country's cultural clout to another level. The show is about indebted people in debt, fighting for survival in a deadly game. It could help South Korea's cultural exports become much bigger contributors to the economy. Coming up, Cisco Chair and CEO Chuck Robbins joins us exclusively to talk about the company's first hybrid work index report on how the pandemic has changed the way we work permanently. He'll join us next. And as we head to break, let's get an update on WeWork's path to the public market. In an online investor presentation, the company said its September revenue hit $228 million despite delays in the return to the workplace. The company preparing to list on the New York Stock Exchange via SPAC. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Well, the pandemic has not only changed our way of life, but it has had a massive impact on the way we work. Cisco has released the first of its quarterly reports into the Hybrid Work Index, which examines how COVID-19 and its associated lockdowns permanently reshaped the workplace. To talk about the findings and much more, we're joined exclusively by Cisco Chair and CEO Chuck Robbins. Chuck, great to have you back with us. What is the data telling you about how the pandemic has changed the workplace for good?
Well, Emily, it's always great to be with you, even though I'm virtual, obviously. Hopefully soon we can be back in the studio together. I think about it across three real categories. First is what the index says about the people, our employees. And, stats like almost 2/3 of them would say that the ability to work in a hybrid model is going to affect who they work for in the future. And candidly, they believe half their companies won't give them that opportunity. Half the companies won't give them that opportunity. So that's a big finding for us. The second big one is that, you've got 61 million meetings that we're hosting monthly on WebEx. But half the people in those meetings don't participate. And so we have to bring together the technology and the people to actually enable the technology to drive the inclusion of the participants into these sessions. The second real aspect of it is around the technology itself. We now know that the home office is like a small branch, and we need the technologies that allow us to treat it like a small branch. We need to be able to troubleshoot and do observability, and we need security at a different level. We need hardened technology. So that's a big difference as we move forward. I think in the month of September, there were 100 million daily email cyber attempts that we were tracking. And so this is another aspect that's going on. And then I think, the place. In a hybrid work world, some people believe, will they ever return to the office? What's going to happen? And the reality is that from 6 months ago, we've seen 61% increase in wireless activity inside our customers who have their wireless networks connected to the cloud. So it's pretty significant what's going to occur.
We've been talking about the Great Resignation, and also I've heard the term the Great Reflection, where you have a lot of employees taking this moment right now to reevaluate their careers. How directly correlated do you think flexibility and having flexibility will be with longevity? How long an employee decides to stay at a certain company?
I think it's going to be critical. I think that we're taking a people-first, flexible approach, and I think that's what we're going to have to do because on the one hand, working from home has been, I'd say, effective and productive. On the other hand, it's brought out a lot of stress, and people have been reassessing their work-life balance. And I think we have an opportunity, if we do this right with hybrid work, to give them more flexibility. The second thing it does, though, is it opens up access to talent. I think many companies were very geographically limited in how they thought about where they would hire. And I think this is going to open up the opportunity for us to hire in lots of different places that we otherwise wouldn't have been thinking about.
And your report also takes a look at AI and whether that will help or hurt employment. I recently interviewed Kai-Fu Lee, a longtime tech executive, mostly working in China, who just wrote a big book about AI. And he paints this idea that by 2041, most jobs literally will be gone. Take a listen to what he had to say.
I think most of the jobs as we know it today will be gone, and AI will be doing them for us. But there will be new jobs. Just as any technology revolution, electricity and internet, small ones like the automatic elevator and Uber, they've all taken jobs and put jobs back. So that is my expectation.
Chuck, do you agree with that? And in your view, how does AI fit into the employment equation?
Well, I think certainly AI is going to replace some jobs. I think easy jobs like CEO, those will definitely be replaced. But and I do think it'll create other new jobs. But what we've seen is that we've been able to leverage AI at the heart of like the WebEx platform to actually create inclusion and more capabilities like noise suppression. There's a whole lot of noise in my house right now that you don't hear because it suppresses it through AI. We're doing real-time language translation via AI. So there's a lot of benefits, I think. And so we don't believe that it's necessarily only going to replace jobs. We think it's going to enhance the employment experience. And we're using a lot of AI to drive some of the inclusive features that we're building into some of our technology.
I'm going to check in with Kai-Fu after this to see if your job is safe or not, Chuck. I'll give you an update. I do want to ask you about the supply chain. I will. I do want to ask you about the supply chain, the chip shortage. It's something that we've been talking about now for 18 months. What are you seeing in the chip supply chain, and where are the bottlenecks that still exist?
Well, I know for a fact, speaking to the folks in the semiconductor industry, Pat Gelsinger, Lisa Su, et cetera, we were on a call today together, and they're currently, the semiconductor industry is in the midst of building out capacity, right? It's not built out. It takes 12, 24, even more months than that. So I think they're working on it, but it hasn't gotten materially better at a time where we see demand continuing to spike. And so, but it's not just semiconductors. It's substrate technology. It's power supplies. It's memory. It's trucks and not having enough drivers. It's port capacity. Now we have power issues in China. We have COVID outbreaks in Southeast Asia. So it's just not one thing. So my current thinking is sort of middle of next year, we'll start to see some gradual improvements, but it's probably 23 when we see demand and supply kind of line up again.
All right. Cisco Chair and CEO Chuck Robbins, good to have you back with us. Thank you so much for sharing all of that today. Well, to the world of SPACs now, and billionaire private equity manager Orlando Bravo has called for more transparency around special purpose acquisition companies and their disclosures around sponsor returns. He spoke exclusively with Bloomberg's Ed Hammond about that and his firm's plan to invest in blockchain technology. Take a listen.
I think in the next 2 to 5 years, it will move to rate control transactions, and we'll be right there just like we were 22 years ago as one of the first software buyout firms in the world.
Another area you and I have discussed is SPACs. Obviously, you did the Thoma Bravo Advantage SPAC earlier this year. It's now de-SPACed through IronSource, which is now trading as a public company. The SPAC game has been somewhat sullied, I suppose, by abuse by some participants, or perhaps like too much energy too quickly going into the space. I know when we've talked about it before, you said you had hoped to do another SPAC. Is that still something that's in the works?
Yes, we will do now. Nobody likes that word. Nobody likes that term. The regulators don't like it. Now investors don't like it. So we for sure will call it something different because it will be something different. I mean, we do believe that there should be great alignment between the SPAC sponsor and the investors, just like there is in private equity. Investing real capital behind it, being the lead investor in the PIPE, for example, which is something that we did in our deal with IronSource. We believe there should be a lot more transparency in terms of what are the returns of that SPAC sponsor, what do they look like, and there should be a lot more transparency in terms of how does that company perform versus the projections that they originally gave the investors. That should be disclosed in every quarter. That should be a requirement. So we feel that SPACs are one of the great financial vehicles for absorbing this wave of large software companies and tech innovators that are looking for alternative forms of financing. Now, it's also a great vehicle to combine the best of the liquidity in the public markets, the diversity of investors that you get in that process, and the best of private equity as well. And we believe we have a model for that.
But when you look at it, yes, a lot of the SPAC deals that were done did involve those kind of companies, but an awful lot also involved the kind of companies that were highly speculative, had sort of predictions that potentially will be met, but they were fairly ambitious, I think, to put it lightly. Is that going to make it difficult to go and do a SPAC in future, because people are going to look at it and say, well, you know, we don't believe the predictions, because the last time this was going around, people were saying it was going to achieve X, Y, and Z, and none of it was delivered?
Look, the SPAC is about who the investor is, who the sponsor is. That's hopefully also helping the company operationally, and it's a good partner. And the SPAC is about the company. That's what it's about. It's like an IPO. Would an investor value a company differently because it went public with this set of banks instead of with this other set of banks, or because it did a direct listing instead of not a direct listing? That's irrelevant. It's about the fundamentals of the company. Now, I do agree with you that the SPAC market shouldn't be for venture deals, because one of the advantages of the SPAC is that you can project your business. And projecting a venture company, no matter how good you are, is very difficult, because you have no track record and history at that company of producing results and seeing where you're going to be in the future. Now, of course, venture companies go public through SPACs because there's the demand from retail investors and others that cannot access the venture capital industry anyway.
Thoma Bravo, managing partner and co-founder, Orlando Bravo there. Well, more on SPACs coming up, and one in particular involving a new internet provider on the block. Starry is going public via SPAC with Firstmark Horizon to make broadband internet more affordable. We're going to be joined by Starry's co-founder and CEO, Chet Kanogia, and Firstmark founder and partner, Amish Jani. This is Bloomberg. Wireless internet provider Starry is going public in a SPAC merger with Firstmark Horizon Acquisition in a deal valued at $1.66 billion. Starry's internet service, which uses small devices to access high-frequency airwaves to provide wireless service, is available in 5 cities, including LA, New York, and Boston, competing with internet and cable company giants like Comcast. Let's talk more about this with Starry founder and CEO Chet Kanogia and Firstmark founder and partner Amish Jani. Gentlemen, thank you so much for joining us. Chet, you are a familiar face on this show. You have a long history of trying to take on the TV industry with video streaming and Aereo, and you were a guest on this program many times. So I'm curious what learnings you took from that experience with Starry.
I think we were, I mean, you could argue that we started the entire streaming thing because we were the first provider that figured out how to do live television. And now that's sort of the norm. And I think we've took, great comfort in that we predicted where the market was going to go. We also understood that I think cord cutting was real, and there's a real subscriber demand for what I will call a simplified product, and whether it's internet access or television or anything along those lines, more modernized version, because today, the incumbent experience is incredibly antiquated and just disappointing for most consumers, and it's largely a function of lack of competition.
Amish, why is FirstMark behind this, and what do you think sets Starry apart from other internet providers?
Yeah, so we've been investors in disruptive technology spaces for a long time. I think the first thing that we look at are management teams, whether it was Toby at Shopify, Ben at Pinterest, Jason at DraftKings. It's founders that can drive innovation and long-term disruption in markets. We've got a 20-year history with Chet and the team here, and we're extraordinarily excited about their ability to execute. We've seen it happen in action, and we think they are a great team to back, number one. Number two, they are vertically integrated, which is different than any other service provider out there. They've built all of their technology from the ground up. Chips, equipment, software, even the router is designed by Starry. So that gives them the ability to control the experience from end to end, and gives them deep R&D modes. And then the third thing is the market. Clearly, this is a massive market. It's a near monopolistic market. It's one of the most important resources one can have access to in terms of broadband, and we think it's ripe for disruption.
Chet, how is the experience actually different for users? If I have Starry, what does that mean in terms of my experience?
So, Emily, it starts when you even order the product, because we actually show up within a 30-minute window of when you want it, versus I'll come between Monday and Friday at 4, between 8 and 12, or whatever that happens to be. So the experience really starts there. Second, at a technological or experiential level, it's a network that we can control up and down, so we can offer you different types of capabilities, both uplink and downlink, low latency. And as Amish mentioned, the wireless devices are designed by us as well, so you are getting a fully managed network at home. So think like really IT, world-class sort of IT experience built into even for residential broadband consumers, which is going to be increasingly more and more important as your collaboration software consumption needs increase, and you need a better low latency network. So all of those are long-term trends that are going to, put us towards networks that are what I will call application sensitive versus just dumb pipes moving bits. And really a technology that what we've done is really built architected network that's application sensitive, and ultimately we deliver a better experience with that.
You currently cover 4.7 million homes across 6 markets. Amish, what is the ambition here? I mean, is the hope for this to be like the Uber of transportation or the Airbnb of travel, and how does Starry get there?
Yeah, absolutely. I mean, the goal is to fundamentally disrupt the experience and to launch across the U.S. and ultimately internationally. And I think our coverage with the existing spectrum that we have covers over 40 million homes, and our ambition is to go after that and go build towards that.
Chet, the competition is pretty big time. You're competing with SpaceX. You're competing with Amazon and their Kuiper satellite networks. What do you have on them?
So it's interesting. Capacity matters in this business. So think about what's really happening, right? You're competing against cable, which is the largest incumbent, and they have about a gigahertz worth of spectrum. And none of these other technologies or approaches really come anywhere close to providing the experience that a customer really needs in any kind of density, right? So those technologies that you mentioned are appropriate for what I will call remote applications. You got a house in the middle of nowhere, or in a prairie, or in a vacation home, that all works great. But when you're in metropolitan areas or dense suburbs, that's where you need a lot of capacity. And your competition is coax and fiber. And in most part, it's just coax. So this is a technology that's designed for density, population centers where people live.
All right. Well, we'll keep our eye on you and the SPAC. Starry founder and CEO Chet Kanogia, and FirstMark founder and partner Amish Johnny. Thank you both. Well, the FIFA soccer video games have sold hundreds of millions of copies worldwide over 2 decades, but they could cease to exist in their current form after publisher Electronic Arts says it might rename them. EA is exploring its naming rights agreement with FIFA, soccer's international governing body. That deal is separate from EA's other official partnerships and licenses. And coming up, the future of art galleries. With a boom in digital art collectibles worldwide over the last few months, will art galleries become digital as well? That's next. This is Bloomberg. The future of art galleries is here. From metaverse and NFT art to virtual reality, there's been a craze around digital art, with this sector surging from $52 million at the end of 2020 to $490 million in April of this year. This according to blockchain development company Consensus. Bloomberg Quick Takes Stella Ko takes a look at what this means for the future of art collectibles by taking us to the first edition of the Digital Art Fair Asia in Hong Kong.
Metaverse, NFT, virtual reality. The first edition of Digital Art Fair Asia shows a new generation of artists.
As Digital Art Fair, we're particularly interested in educating the new generation of art collector and even traditional art collector to enter the new digital world.
The fair features over 200 digital and NFT artworks, from Turkish artist Rafik Anadol's Metaverse NFT collection to images paying tribute to Hong Kong's architecture.
I feel like the digital art space has slowly been evolving. I think social media plays a huge part in society these days, and Instagram got way bigger from when I first arrived. We have Surreal Hong Kong. Surreal is the very talented photographer that likes to elevate his photography by using Photoshop techniques. We have the work of Blair Sugarman and JSR Pixel. They're doing light paintings with drones. So they've actually programmed the drones to do the shape around iconic Hong Kong buildings. So in the photography section, we sell NFTs, which are available on this screen. You have to scan the QR code and it takes you to Refinable's website. There you pay in Ethereum and you have to have a wallet. This is a new way of purchasing artwork.
NFT, or non-fungible token, runs on blockchain technology. Unlike bitcoins, each NFT can be a unique digital property, and one NFT can represent ownership of a specific work of art. NFT's ability to confer uniqueness has led to a boom in digital art's collectability. NFT art started making headlines in March when Christie's auctioned a collage of images by artist Beeple to a Singapore-based crypto investor who paid $69.3 million worth of Ether. Sabotage, whose work encompasses street art and stencil, started offering NFT in Hong Kong last November.
It's not so much the 2D anymore, it's not even 3D, it's even 4D. You can get the whole story of how you approach your work and your process and your methods.
A report from blockchain development company Consensus says the NFT art market was up more than 800% from $52 million at the end of 2020 to $490 million in April 2021. Christie's announced in September that it had shattered the $100 million ceiling in NFT sales worldwide, with its first NFT auction in Asia hitting a total of $15.6 million in sales. And outside of Asia, Switzerland's Art Basel had its first NFT auction the same month. But NFT's soaring popularity has also raised concerns. Some critics are calling it just another commercially exploitable hype, while others point to suspicions of wash trading. And there's also the ecological impact. Still, that's not fazing artists and collectors.
I'm totally excited about the whole talk that's going with this phenomenon at the moment. It's a new field, a new playing field, and I'm out there playing and experimenting.
I think the world is really ready for promoting digital artists, trying to understand what's NFT, and the gallery is actually getting ready to jump in the NFT world.
That was Bloomberg Quick Takes, Stella Ko. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by BitClout CEO Nader Al-Naji, as well as Raj Ganguly, co-founder and general partner at B Capital Group. It'll be a great Friday show. I'm Emily Chang in San Francisco, and this is Bloomberg.